kind of amazing, isn't it? This idea that a tiny strip of water, just what, 21 miles wide, holds so much sway over the entire global economy.
Mm-hmm.
And that's exactly what we're talking about today.
Yeah.
The Strait of Hormuz, it's been all over the news.
Yeah.
And it's not just, theoretical. Just last month, June 2025, Iran's parliament made this really significant threat about this exact choke point. Apparently, it was right after an Israeli strike on some of their nuclear infrastructure.
Right. And our mission here for this deep dive is really to get into why this one small strait matters so much. We'll look at how closing it off, even for a little while, could send these huge shockwaves through oil prices, supply chains.
And what it all means for you, basically, whether you're running
right.
business, filling up your car, or just living in this interconnected world.
Exactly.
We've pulled this together from the latest analyses, recent articles, trying to give you the essential facts without, drowning you in data. So let's get into it.
Let's do it.
Okay, so let's unpack this then. For those of us trying to really picture it, why is this specific waterway so critical? What exactly is the Strait of Hormuz?
Well, at its core, it's this narrow shipping channel, only about 21 miles wide at its tightest point. It connects the Persian Gulf, where a lot of oil production happens, to the Gulf of Oman, and then out into the Arabian Sea and the wider ocean.
It's just 21 miles.
Yeah, but calling it just a shipping lane, I mean, that really doesn't capture it. Think of it more like the world's main energy artery. It's this crucial bottleneck, and a shocking amount of global energy has to squeeze through it.
Okay, shocking amount. Can you put some numbers on that? Like, how much are we really talking about flowing through there?
The figures are pretty staggering, actually. So looking at 2024 and the first part of 2025, we saw around 20 million barrels of oil going through the strait every single day.
20 million barrels a day.
Yeah, that's somewhere between 20 and 30% of all seaborne oil trade globally, and, global petroleum liquids overall. And it's not just oil. You've also got about 20% of the world's liquefied natural gas, LNG, making that same journey.
So roughly a third of seaborne oil and a fifth of LNG all funneling through this tiny gap.
Exactly. It's narrower than the English Channel, carrying all that energy.
That's incredible. Which, immediately makes you ask, are there any other ways around? Any viable alternatives for moving that much oil and gas? Or are we just completely reliant on Hormuz?
And that's really the crux of the issue. There are some pipelines, sure. Like Saudi Arabia has its East-West pipeline, and the UAE has the Habshan Fujairah line.
Okay.
But the problem is capacity. Combined, those pipelines can maybe reroute about 7 million barrels per day.
7 million. Compared to the 20 million going through the strait.
Right. It's nowhere near enough. It's like, closing a major highway and expecting a couple of side roads to handle all the traffic. It just doesn't work.
And we've seen markets react before, haven't we? Even when it's just talk, not actual closure.
Oh, absolutely. What's fascinating here is how incredibly sensitive markets are. Even the slightest hint of instability in that region sends jitters everywhere. I remember back in early 2012, just the suggestion that Iran might close the strait had the whole world bracing for impact.
Oh.
It really shows you how fragile things are when so much depends on one single point.
Okay, so let's talk about the key player here, Iran. June 14th, 2025, their parliament endorses this measure to close Hormuz. And they explicitly linked it, you said, to retaliation for strikes on nuclear sites. What's Iran's angle here? What do they actually gain by making such a huge threat?
Well, that's where it gets really interesting, and it highlights this kind of paradox in geopolitics.
Yeah.
The real power might not be in actually doing it, but in making a credible threat that you could do it.
Oh, okay.
Because look, while closing Hormuz definitely signals defiance, the strong political message, right?
Yeah.
But a full long-term closure would massively backfire on Iran itself. Well, for starters, about 1.5 million barrels of Iran's own oil exports go through Hormuz every day. Shutting it down hits their own revenue hard. Oil is, roughly 20% of their GDP?
Right.
Plus, it risks seriously ticking off their major trading partners, especially China, which relies heavily on oil coming out of the Gulf. You don't want to alienate your biggest customers.
So if actually doing it is so costly for them too, you're saying the threat itself is the weapon. It's like a high-stakes bargaining chip.
Precisely. It's a form of deterrence, really. They're signaling, look what we could do if pushed too far. The potential economic chaos is the leverage, maybe stopping further actions against them without actually having to, pull the trigger and suffer the consequences themselves.
Right. That makes sense. Now let's give it to the money side. If this choke point really is that vital, What happens to oil prices almost immediately if there's a serious threat or even a minor closure? Are analysts putting numbers on this?
Oh, they absolutely are. And the projections are pretty stark. You've got city analysts saying even a short disruption, say 3 months, taking just 3 million barrels a day off the market, not even the full 20 million, could push Brent crude oil up to $90 a barrel.
$90, just from a partial short disruption.
Yeah. And if you're talking about a more serious, prolonged closure, well, Lazard, JP Morgan, Oxford Economics, they're talking peaks of maybe $120, even $130 a barrel. Clearview Energy suggests a jump of anywhere from $8 to $31 per barrel pretty quickly. These aren't small changes.
And we saw a taste of this just recently, didn't we? In June 2025.
That's right. Those brief disruptions we mentioned, Brent crude went from around $69 up to $74.
Yeah.
And here in the U.S., average gasoline prices jumped about 20 cents a gallon almost overnight.
Right.
So it shows you how fast these geopolitical events hit, regular people's wallets.
So connecting the dots,
Yeah.
you can see how quickly living costs could spiral. If you layer on other problems, like maybe the ongoing attacks in the Red Sea or if something happened to, say, Karg Island, Iran's big oil terminal,
Right. A worst case scenario.
then prices could blow past $130.
That's the fear. And at that point, you're definitely talking about fueling global inflation, maybe even tipping fragile economies into recession. It gets serious very quickly.
And it's obviously not just the price at the pump that hurts, right? When oil prices spike like that, it drives up costs for everything. Shipping, trucking, flying.
Exactly. That cost increase just ripples through the entire supply chain. It hits businesses' bottom lines. It gets passed on to consumers. It's like when your delivery fees suddenly jump up, sometimes that's linked back to these global energy pressures miles away.
Right.
EY, the consultancy, they estimate that we could see key economic indicators like the purchasing managers' indices start to contract. And U.S. inflation could creep back up towards 6%.
Oof.
Yeah. And for economies already battling inflation, high commodity costs are the last thing they need. Plus, any disruption at ports just adds to the logistical headaches we've already seen.
Any specific examples of how countries or industries are reacting?
Well, India is a big buyer of Iranian oil, and reports suggest they've been trying to shore up defenses by buying more crude from places like West Africa, diversifying their sources.
Smart.
And definitely, logistics companies are bracing for impact. They're expecting higher insurance premiums for shipping in the region, higher charter rates.
Yeah.
It basically makes everything riskier and more expensive. It really does raise that big question. Just how resilient are our supply chains when these shocks hit?
So given these huge global stakes, what's the international response look like? How does the world try to manage this kind of threat?
Well, there's already a pretty significant military presence there, which tells you how important these waters are strategically. You've got the U.S. Fifth Fleet based nearby in Bahrain.
Right.
NATO forces operate in the region. And there's also EMESO, that's the European-led mission, with France, Italy, Germany, and others specifically focused on maritime awareness in Hormuz. Their main job is ensuring freedom of navigation and deterring any attempts at a blockade.
Okay. And what about China? You mentioned they're a huge customer. They rely on Gulf oil for, 40% of their needs. How much influence do they actually have to try and cool things down? Or are they kind of stuck because they need the oil so badly?
That's a great question. China's definitely in a tricky spot. Their dependence gives them a huge incentive to push for de-escalation, and they certainly use their diplomatic channels to urge calm. But direct leverage, it's complicated.
Yeah.
Militarily, if Iran actually moved to close the strait, you'd almost certainly see a major U.S. naval buildup in response. Some analysts even suggest a counter-blockade against Iran could be used to apply pressure, forcing them to reopen Hormuz. It could escalate into a very dangerous standoff pretty fast.
Oh, okay, so it's a tense situation.
Right.
What does all this mean for actually managing the risk? What practical steps are being looked at or taken to build some resilience?
Well, like we said, those pipelines through Saudi Arabia and the UAE helped a bit, but they're nowhere near a full solution. Only about 7 million barrels a day capacity versus the 20 million going through the strait.
Right. Limited help.
So other measures come into play. Countries are making sure their strategic petroleum reserves are ready to be released if needed. There's talk about OPEC plus potentially easing their production cuts to bring more supply online. And the U.S. could ramp up its own shale oil production.
Okay. And for businesses, especially in logistics.
For them, it's really about contingency planning. Things like talking to shipping companies now about alternative routes, maybe the much longer, more expensive trip around Africa, avoiding the area altogether via Bab el-Mandeb.
Yeah, that adds a lot of time and cost.
It does. Also, increasing inventory levels for critical goods so you have more buffer stock, looking into fuel price hedging strategies to lock in costs, and just constantly monitoring the political situation, sanctions, news, all of that. It really comes down to proactive planning, trying to stay agile in what's clearly a very volatile environment.
So wrapping this up, the core takeaway seems to be the Strait of Hormuz is and remains this incredibly strategic but also incredibly vulnerable choke point. And Iran's recent threats just hammer home the geopolitical leverage that comes with controlling it.
Exactly. And while a full-on extended closure seems pretty unlikely, mostly because it would hurt Iran so much too, we have to be clear that even short disruptions could be really severe. We're talking oil prices potentially spiking over $100 a barrel, major supply chain delays, and another wave of inflation hitting globally.
It's really something, isn't it? How this one narrow passage, just 21 miles wide, can have such a direct and immediate impact on, well, almost everything,
Yeah.
from global markets down to the price of goods on your local store shelves. Which leaves us with a pretty big question, I think. How ready are businesses, and nations for that matter, for this kind of high-stakes volatility? And are the steps we've talked about enough, or do we need to think even bigger about securing these vital energy and trade routes for the future?